Good morning, good afternoon, everyone. It's Ankit. Whenever or wherever you're watching this video, thank you for taking the time out of your busy schedule to watch today's video. I hope everyone's having the best day or the best week of their life. If you found value and are excited about today's video, make sure to hit the subscribe button for more videos like this. Usually my videos are about investing, health, and life. Today's video is going to be about the only sector that's green this year so far, and what stocks you can invest in this sector. Leave a comment below with what sector you think it is, and why you think it is, and what stocks you think you can invest in under this sector, and why, in the comments below. Let's try to hit 7,000 subscribers in 7 months. With all that out of the way, let's get into today's video and talk about this sector. Also, what stocks you can buy under this sector. The sector that I'm referring to in this video is energy sector. And the first stock we're going to talk about under the energy sector is OXY. Currently trading at 63.26. After hours, it was 63.60. The PE ratio is 9.62. Dividends, it pays 0.82%. The market cap for it is 59 billion. Let's check what it is year to date. It is up 148% year to date. 5 years, it's up 3.70, and the max is up 555%. Let's look at the finance, and as you can see, they're beating their earnings, and they beat it by a lot in Q2 of 2021. The thing that is alarming is the net change in cash. It is down 410%, negative 852 million. Devon Energy Corporation, DVN, is one of the stocks that I actually do own in my portfolio. It's because of the dividends it pays, and the PE ratio right now is currently low. And I really like their finances, which we'll go over right now. It's currently trading at 69.92. The market cap for it is 46 billion. The PE ratio is 13.10. It does pay a nice dividends of 7.27, as I said earlier. Let's look at the year chart. It's up 169%. The 5 year, it's up 95%. The max, it's up 2,278%. Let's look at their finance. As you can see, their financial balance sheet looks amazing. This is one of the reasons why I invested in this stock. And they are beating earnings. So this is a company in a position I'll probably keep adding in my portfolio. And it's a stock I recommend when it dips that you take advantage of it and you try to buy it and add it to your portfolio. The next energy stock you can add to your list is ExxonMobil Corporation, XOM, which is currently trading at 97.59. It has a market cap of 411 billion. The PE ratio is 16.17. It does pay a nice dividends of 3.61. Let's look at the 1 year chart. In the 1 year, it's been up 67%. And in the 5 years, it's up 22%. And overall, it's up 2,688%. When you look at their financials look great. Their net change in cash is up 4.27 billion, which is 603%. They did miss EPS in Q1 of 2022 by 7%. They did beat revenue by 6.62%. And the earnings before that, they've been beating both EPS and revenue. This is a stock, when it dips, it's a great opportunity for you to buy. Remember, this is not financial advice. It's just a recommendation. It pays a nice dividends, and it shows that it increases over time. So it's a great stock. When you see a dip, maybe you should consider buying it, but make sure you do your research before you do. So out of all the stocks that we talked about today, the one that Warren Buffett bought is OXY. Berkshire A and B class recently just announced that they own 136.4 million shares of OXY after the purchase of over 100 million shares since March 2nd. This purchase amounts to an over 14% stake in the company's worth approximately 7.7 billion and would make it ranked number 1 in Berkshire's top 10 publicly traded holdings. The next stock we're going to talk about is APA Corporation US, APA. Trading at 47.62. The market cap for it is 16.11 billion. It does have a nice low PE ratio of 6.79. It pays a nice dividends of 1.05%. Year to date, it is up 128.94%. Over the 5 years, it's up 1.34%. And the max, it's up 592%. Let's look at their financials. And as you can see, their financials look decent. Net change in cash is alarming. It is down 124%. It is down negative 68 million. The cost of revenue is also down. It's as of March 2022, it is 776 million. It's down 4.9%. They did miss their last 2 EPSs, as you can see. They missed revenue in Q3 of 2021, but they did beat revenue by 57%, which is really great. Then we have Chevron Corporation, CVX, which is currently trading at 178.28. The market cap for it is 350 billion. PE ratio is 16.76. It does pay a nice dividends as well, 3.19. 1 year chart, it's up 71%. The 5 year chart, 72%. And the max 2053.14%. Let's look at their financials. And as you can see, their financials look amazing. They do have 6.01 billion, up 293%. In net change in cash, cost of revenue is up 85%. The EPS is up 347%. In Q1, they did miss EPS, and Q4 of 2021, they missed EPS. They did beat all their revenues, as you can see. So I'm curious on which one would you guys prefer buying out of all these that we're going over today. Let me know in the comments below. And I'm also curious on whether you like Chevron or ExxonMobil, which one you prefer if you had to buy one. Let me know in the comments below so we can have a nice discussion about this. And the last stock we're going to talk about is Marathon Oil Corporation, which is currently trading at 31.07, which has a market cap of 21.99 billion. PE ratio is 10.83. It does pay a nice dividends of 1.03%. Let's look at the 1 year chart. It's up 156%. The 5 year chart's up 144%. And the max chart is up 253%. And let's see if we can go to their financials. And when you go to their financials, they did go down net change in cash by 73%. Cash and equivalents is down 39%, but everything else they are up in. EPS is up 1,383% year to year change.